All right, let's talk about Bitcoin. Yes, that digital gold, that internet funny money, that thing your nephew won't shut up about at Thanksgiving. Well, buckle up, because as of today, May 22nd, 2025, this magnificent, maddening creation has decided to casually vault past $111,000. That's right, 111,000 American dollars for one single Bitcoin. This isn't just a new record, it's the kind of record that makes previous records look like participation trophies. It's a number so large it almost feels like a typo from a particularly enthusiastic cat walking across a keyboard. Yet here we are, staring it in the face. Now, why should you, a sensible person who probably prefers their money to be, tangible, care about this? Well, because when Bitcoin does something this dramatic, it's like a financial earthquake. The tremors are felt far and wide, shaking up not just the cryptocurrency world, but potentially rattling the cages of the traditional stock market too. This isn't just nerds getting rich. This is a significant marker, a flashing neon sign indicating that something profound, or perhaps profoundly baffling, is happening in the world of finance. It's a moment that screams for attention, demanding we ask, what in the digital heck is going on here? The journey to this dizzying height wasn't exactly a leisurely Sunday drive. Just a couple of days ago, on May 20th, Bitcoin was teasing us, hitting 105,500, even poking its head above 107,000 for a bit. This itself was a big deal, a significant jump from the roughly 102,100 it saw on May 19th. And if you zoom out further, back in March 2024, it was trading at over 73,000, and by early May this year, around 94,315. So this latest surge isn't just a blip, it's part of a powerful, sustained upward trajectory that has left analysts scrambling for superlatives and skeptics scratching their heads, possibly in disbelief, or perhaps just checking their own lottery tickets. So what's the magic formula? What's the secret sauce that has propelled Bitcoin to these stratospheric levels? Is it pixie dust, a collective global fever dream, or more likely, a confluence of factors involving some very large players and some very interesting market mechanics? The truth, as it often is a bit more complicated than a simple headline grab, involving a perfect storm of institutional enthusiasm, new investment vehicles making access easier than ever, and a futures market that's buzzing like a hornet's nest. We're going to unpack these, because understanding this is key to understanding where this whole wild ride might be headed next. The usual suspects, with more money. First up in our lineup of rocket fuel ingredients, spot Bitcoin exchange-traded funds, or ETFs. Now, ETFs are not new. They're like investment baskets that hold assets, and you can buy shares of the basket on the stock market. Think of it as buying a pre-packaged financial fruit salad, instead of picking each fruit yourself. The game changer here was the approval of spot Bitcoin ETFs in the United States back in 2024. This meant everyday investors, and more importantly, big institutional players, could get exposure to actual Bitcoin without the faff of digital wallets and private keys. And boy, did they dive in. In just the 3 weeks leading up to May 20th and 21st, these US spot Bitcoin ETFs hoovered up a staggering $6.9 billion. Yes, billion with a B. Then there's the big kahunas institutional investors. We're talking about the giants of the financial world, the corporations and investment firms with pockets deeper than the Mariana Trench. These institutions have been steadily increasing their appetite for crypto, and Bitcoin is their main course. Over the 5 weeks leading up to May 20th and 21st, they poured $785 million into crypto investment products, with a hefty $557 million of that going directly into Bitcoin. For instance, a company called Strategy, formerly known as MicroStrategy, a name synonymous with "we really like Bitcoin," recently snapped up another 7,390 Bitcoin for about $765 million. Not to be outdone, Japan's Metaplanet also jumped on the bandwagon, purchasing 1,004 Bitcoin for around $129 million as of May 19th. This isn't chump change, it's a serious vote of confidence. And let's not forget the futures market, which is essentially a casino where people bet on the future price of assets. Bitcoin's total open interest, that's the total value of outstanding futures contracts, in the derivatives market soared to an all-time high of $72.63 billion on May 20th, 2025. To put that into perspective, just a month earlier, on April 19th, it was $57.1 billion. That's a massive jump. indicating a huge increase in speculative interest and trading activity. Specifically, Bitcoin futures on the Chicago Mercantile Exchange, a playground for serious institutional traders, hit a 90-day high of 157,875 Bitcoin in open interest, worth about $16.76 billion on May 19th. This signals that sophisticated investors are increasingly using futures to hedge or bet on Bitcoin's price movements. Finally, for those who like their financial tea leaves read by chart patterns, there's the cup and handle. Apparently, Bitcoin's price chart has been forming this rather quaintly named pattern since December 2024. Technical analysts, the fortune tellers of the financial world, suggest this pattern points towards a potential price target of, get this, $138,000. With Bitcoin's price currently breaking past previous resistance levels around 106,000 to 109,000, these chart watchers are getting rather excited. While it sounds a bit like financial astrology, these patterns can become self-fulfilling prophecies if enough traders believe in them and act accordingly. So, a mix of easy access, big money, and speculative fervor. Standard. Now, when Bitcoin throws a party this extravagant, you can bet the neighbors are going to notice. And by neighbors, I mean the good old, slightly more traditional stock market. This surge in Bitcoin's price isn't happening in a vacuum. It sends ripples or sometimes even waves across other financial waters. One immediate effect can be a boost in investor confidence, particularly for stocks that have even a whiff of blockchain technology or cryptocurrency mining about them. Suddenly, those companies look a lot more glamorous, a lot more now, and investors might just be tempted to throw some money their way, hoping to catch some of the reflected crypto glow. Furthermore, the increased institutional investment in Bitcoin could lead to some interesting revaluations. Publicly traded companies that have been bold or reckless, depending on your viewpoint, enough to hold significant Bitcoin reserves on their balance sheets might see their stock prices climb. Think about it. If a company is sitting on a pile of digital gold that's suddenly worth a whole lot more, its overall value, in theory, increases. However, this coin has two sides. This very connection can also lead to increased volatility in the stock market, especially for those companies heavily invested in cryptocurrencies. If Bitcoin takes a tumble, their stocks could follow suit, making for a rather bumpy ride for their shareholders. And what about Bitcoin's digital brethren, the thousands of other blockchain-based cryptocurrencies, affectionately or sometimes derisively known as altcoins? Well, a rising Bitcoin tide tends to lift many of these other boats. Historically, when Bitcoin performs strongly, it often sparks increased interest and investment across the broader crypto market. Investors, flush with Bitcoin profits or inspired by its success, might look for the next Bitcoin, pouring capital into smaller, potentially higher growth altcoins. This can drive up their prices and market capitalizations, creating a sort of crypto gold rush atmosphere where everything digital and decentralized suddenly looks appealing. This phenomenon can also enhance overall confidence in the legitimacy of other blockchain-based cryptocurrencies. If big institutions are validating Bitcoin, it lends a certain credibility to the underlying blockchain technology and the broader crypto ecosystem. This could encourage wider adoption not just of Bitcoin, but of various blockchain technologies for all sorts of applications, from decentralized finance to supply chain management. The significant surge in Bitcoin's value acts as a massive, blinking advertisement for the entire crypto space, potentially attracting more mainstream users and investors, and pushing blockchain further into the public consciousness as a viable, if still volatile, investment option. Before you rush off to remortgage your house to buy a sliver of Bitcoin, there are a few, shall we say, quirks about this digital marvel worth noting. First, its famous scarcity. Bitcoin's supply is algorithmically capped at 21 million coins. That's it. No more can ever be created. As of April 2021, which feels like a lifetime ago in crypto years, about 89% of these coins had already been mined. This built-in, unchangeable scarcity is a fundamental part of Bitcoin's narrative, often cited as a key reason for its value. It's like digital real estate in a city with very strict zoning laws. They're not making any more of it, folks. Then there are the whales. No, not the majestic ocean mammals, though they too are large and can cause significant ripples. In the crypto world, whales refer to a relatively small number of addresses that hold a massive portion of the total Bitcoin supply. Think of them as the digital equivalent of Smaug sitting on his pile of gold. The issue here is concentration. When a few players control a lot of the chips, the market can be incredibly susceptible to their actions. If a whale decides to sell a large chunk of their holdings, it can send prices tumbling. Conversely, if they start buying, it can fuel a rally. It makes for exciting, if somewhat nerve-wracking, market dynamics. And we can't talk about Bitcoin without mentioning the enormous gas-guzzling elephant in the room, its energy consumption. The process of mining new Bitcoins and verifying transactions is incredibly energy-intensive. We're talking about a network that, for a single transaction, can consume an amount of energy comparable to that used by a small country over a period of time. This has quite rightly raised significant environmental concerns. While proponents argue that much of this energy is renewable, or that the system is evolving, the sheer scale of its electricity use remains a contentious point, a significant asterisk next to its dazzling price. So, what's the crystal ball say for Bitcoin and the wider crypto world now that we've breached $111,000? Well, the combination of strong institutional demand, those sky-high open interest figures in the futures market, and those optimistic chart patterns all point towards a continued bullish or positive outlook. There's certainly momentum for further upward trajectory and potentially new all-time highs, perhaps even that 138,000 whispered about by the chartists. However, and this is a big however, investors should strap in and wear a helmet. The inherent volatility of the crypto market hasn't magically disappeared. Regulatory attention is also likely to intensify with these new highs, which could significantly impact how all crypto projects operate. It's a thrilling high-stakes game, and while the rewards can be immense, the risks remain just as profound. Proceed with caution, and maybe don't tell your nephew you're thinking of investing.